Hey everyone, welcome back to the Ledger Labs podcast. I'm Gary Jain, and today we're diving into something I know a lot of you are curious about, but maybe a little skeptical of. How AI is actually changing the game for e-commerce finance. And I'm not talking about the hype, I'm talking about the real stuff. The messy accounting, the inventory nightmares, the cash flow panic at 2 a.m. With me today is Henry Brooks. Henry's been in the e-commerce trenches for years, and he's now helping brands use AI to fix the financial chaos that honestly most founders don't even realize they're drowning in. Henry, welcome to the show.
Thanks for having me, Gary. Yeah, I'm excited to dig into this because honestly, when people hear AI and accounting, their eyes glaze over, right? But this stuff is actually saving businesses 6 figures a year.
6 figures? Okay, you've got my attention. Let's start with the real talk. Where are most e-commerce founders completely bleeding money without even knowing it?
So the number one thing I see, and this is across the board, whether you're doing $500,000 or $5 million in revenue, is cash flow blindness. You know, founders look at their Shopify dashboard, they see sales going up, and they think, great, we're crushing it. But then 3 months later, they can't make payroll because they've got $200,000 tied up in inventory that's not moving, or their payment processor is holding funds, or they just didn't forecast their quarterly taxes.
Yeah, I see this all the time. And it's not because these are bad business owners, right? They're focused on growth, on marketing, on product. The back-end finance stuff is this black box that they deal with once a quarter when their bookkeeper sends them a P&L they don't really understand.
Exactly. And here's the thing. Most of them are using tools that were built for traditional retail or service businesses. QuickBooks is great, but it's not designed for the complexity of e-commerce. You've got revenue coming in from Shopify, Amazon, maybe Faire or wholesale channels. You've got Stripe fees, payment processor holds, returns, chargebacks, and someone's got to manually reconcile all of that.
Oh man, the reconciliation nightmare. I had a client last month who was spending, no exaggeration, 40 hours a month just matching transactions between Shopify and QuickBooks. That's a full-time job just to know where your money is.
Right? And that's where AI starts to make sense. Not as this futuristic robot accountant, but as a tool that does the boring, repetitive stuff so you can actually focus on making decisions.
Okay, so before we get into the solutions, because I know everyone listening is like, just tell me how to fix this. Let me ask you this. What's the biggest emotional moment you've seen with a client? Like the moment they realize how bad it actually is.
Oh, man. So I had this client, Shopify store, doing about $3 million a year in revenue, selling outdoor gear. Great brand, great products. They came to me because they were profitable, but the founder couldn't figure out why he couldn't pay himself more than $60K a year. We dug into the numbers, and it turned out they were sitting on $180,000 in dead inventory. Stuff they'd overordered 18 months ago that was just rotting in a warehouse.
Wow.
Yeah, and the worst part, they didn't even know. Their bookkeeper was just recording it as inventory on the balance sheet, but nobody was flagging that it hadn't moved in over a year. So their cash flow was strangled, and they thought they just needed to sell more. But really, they needed to stop buying so much crap.
And let me guess, they didn't have any kind of forecasting system to prevent that in the first place.
None. They were ordering based on gut feel. Oh, this product sold well last summer. Let's order 5,000 units. No data, no historical analysis, no seasonality adjustments, just vibes.
Vibes-based inventory management. I love it. All right. So for everyone listening right now, if you're nodding your head thinking, yeah, that's me, you're not alone. This is super common. So Henry, walk me through how AI actually starts to solve this. Where do you even begin?
Okay, so here's the thing. AI in finance isn't one tool, it's a stack. And I like to break it down into 3 layers: foundation, intelligence, and strategic. Let me walk you through each one.
I'm all ears.
All right, layer 1, foundation. This is all about automation of the boring stuff. AI-powered reconciliation tools. Think things like Synder, A2X, or even newer tools like Truewind. These can automatically match your Shopify sales, your Stripe payouts, your Amazon settlements, and feed them into QuickBooks or Xero. What used to take 40 hours a month now takes maybe 4. And it's not just faster, it's more accurate.
So you're basically training the AI to recognize patterns in your transaction.
Exactly. And the more data it sees, the smarter it gets. So if you have a recurring Shopify fee or a specific supplier you pay every month, the AI learns that and starts auto-categorizing it. Now here's the key. This frees up your bookkeeper or your internal team to do the higher value stuff, like actually analyzing trends, not just entering data.
Right, because nobody got into e-commerce to spend their Saturday reconciling credit card statements.
God, no. Okay, so that's layer 1. Layer 2, intelligence. This is where it gets really interesting. Once your data is clean and automated, you can start using AI for predictive insights, cash flow forecasting, inventory optimization, even pricing strategies.
Give me an example, like what does that actually look like in practice?
All right, so same client I mentioned earlier, the outdoor gear company. Once we got their foundation layer sorted, we plugged in a tool called Fathom. Actually, we ended up using a combination of Fathom and some custom Power BI dashboards. The AI started analyzing their sales data, their inventory turnover rates, their seasonality trends, and it flagged something we never would have caught manually.
What was it?
Their best-selling product, camping backpacks, had a huge spike in returns every July, like 40% return rate. But only in July. The rest of the year, it was under 10%. So we dug deeper, and it turned out that during July, they were running aggressive Facebook ads targeting last-minute campers who were buying on impulse. Those customers were way more likely to return the product because they didn't actually need it.
Wow, so the AI basically told them to stop advertising in July.
Well, not exactly. We adjusted the targeting to focus on higher intent buyers, people searching for best backpacking gear versus quick camping trip. Returns dropped to 15% the next July, and their profit margin on that product line went up by like 18%.
That's wild. And you wouldn't have found that without the AI crunching those numbers.
No way. That's the power of layer 2. It's not replacing human judgment. It's just giving you insights you'd never have time to find on your own.
Okay, so we've got foundation, automation, intelligence, predictive insights. What's layer 3?
Layer 3 is strategic. This is where AI becomes your co-pilot for decision-making, real-time dashboards, scenario modeling, what-if analysis. So let's say you're thinking about launching a new product line. Traditionally, you'd build a spreadsheet, make a bunch of assumptions, and hope for the best. With AI, you can plug in historical data, competitor pricing, market trends, and it'll give you a probabilistic forecast. Like, if you launch this product at $49, you'll likely sell 3,000 units in the first quarter with a 60% confidence interval.
That's kind of scary, actually, in a good way.
Right? It's not perfect. AI doesn't know everything, but it's way better than gut feel. And here's the thing, Gary. This stuff isn't just for 8-figure brands anymore. Even if you're doing $1 million a year, these tools are accessible. They're mostly subscription-based, and the ROI is immediate.
Okay, but let me push back a little here. Because I think a lot of founders hear this and think, that sounds amazing, but it's probably complicated to set up and I don't have time. What's the reality? How hard is it to actually implement this stuff?
Yeah, that's a totally fair concern. Honestly, the foundation layer, the automation stuff, that's the easiest. Most of these tools have plug-and-play integrations with Shopify, QuickBooks, Xero. You can be up and running in a week. The intelligence and strategic layers take a bit more work. You need clean data, you need someone who understands your business model, and you need to commit to actually using the insights. But I'd say for most brands, you can get 80% of the value in the first 30 days.
And the other 20%?
That's the long game. That's where you're refining, testing, optimizing. But even that 80% is game changing.
All right, so I want to ask you this. If you're listening right now and you're thinking, okay, I'm sold, I want to do this. What's the first step? Like Monday morning, what should they do?
First step, audit your current process. How much time are you or your team spending on manual reconciliation, data entry, report generation? Write it down. Like actually track it for a week. Because most founders underestimate how much time they're wasting. Once you know that number, you can calculate the ROI of automation. If you're spending 20 hours a month at $50 per hour, that's $12,000 a year. A tool like Synder costs like $50 a month. The math is pretty obvious.
Right. And that doesn't even account for the errors you're probably making manually.
Exactly. Manual data entry has like a 2 to 5% error rate. AI is way more accurate.
Okay, so step one, audit. What's step two?
Step 2, pick one area to automate first. Don't try to boil the ocean. If your biggest pain point is reconciliation, start there. If it's cash flow forecasting, tackle that. The key is to get a quick win, prove the value, and then expand.
I love that. Start small, prove it works, then scale. All right, so we've covered the foundation, the intelligence, the strategy. Before we wrap up, I want to talk about the future a bit. Where do you think this is all headed?
Oh man, this is where it gets really fun. So right now we're in like the early days of AI in finance. Most tools are still reactive. They're analyzing past data and giving you insights. But the next wave is going to be proactive. AI that doesn't just tell you what happened, but tells you what to do next.
What do you mean?
Okay, so imagine this. It's Monday morning, you log into your dashboard, and your AI says, hey, based on your current cash flow, your inventory levels, and your upcoming expenses, you're going to be short $15,000 in 3 weeks. Here are 3 options. Delay this supplier payment, run a flash sale on these slow-moving SKUs, or tap your line of credit. And it's not just guessing, it's pulling real-time data from your bank, your sales channels, your suppliers.
That's like having a CFO in your pocket.
Exactly. And I think within the next 2 to 3 years, that's going to be the norm for e-commerce brands. The brands that adopt this early are going to have a massive competitive advantage. They're going to be faster, smarter, more profitable, and the brands that don't, they're going to struggle to keep up.
Yeah, I mean, we're already seeing that with our clients. The ones who are investing in this stuff, even if it's just basic automation, they're scaling faster, they're sleeping better at night, they're making better decisions. It's not magic, but it's pretty damn close.
Right. And here's the thing I want everyone to understand. AI is not here to replace accountants or bookkeepers or CFOs. It's here to make them better. Your bookkeeper should be spending their time giving you strategic advice, not entering transactions. Your CFO should be helping you plan for growth, not chasing down receipts. AI handles the grunt work so humans can do the high-value stuff.
That's such an important point. Because I think there's this fear, right? Like if I automate everything, do I still need my accountant? And the answer is yes. You just need them for the right things.
Absolutely. In fact, I'd argue you need them more because now you have better data to work with. Garbage in, garbage out. But clean, real-time data, that's when you can actually make strategic decisions.
All right, so let's bring this home. If you're listening right now, and I know some of you are probably driving or at the gym or folding laundry, here's what I want you to take away from this conversation. First, if your e-commerce business is doing over $500,000 a year and you're still manually reconciling transactions, you're leaving money on the table. Period. The tools exist, they're affordable, and the ROI is immediate. Second, AI is not some futuristic thing you need to worry about 5 years from now. It's here, it's working, and your competitors are probably already using it. So the question isn't, should I adopt AI? It's how fast can I get started? And third, and this is maybe the most important thing, you don't have to do this alone. Find a partner, whether it's someone like Henry or a firm like ours at Ledger Labs, who understands both the finance side and the tech side. Because the tools are great, but you need someone who knows how to implement them in a way that actually makes sense for your business.
Couldn't have said it better, Gary. And honestly, if anyone listening wants to dig deeper into this stuff, feel free to reach out. I'm always happy to talk shop.
Awesome. Henry, this has been fantastic. I think we've given people a lot to think about and hopefully a lot to do.
Definitely. Thanks for having me, man. This was fun.
All right, everyone. That's it for today's episode. If you found this helpful, do me a favor. Share it with another founder who's drowning in spreadsheets and deserves a break. And if you want more content like this, head over to theledgerlabs.com Check out our blog, our resources, and feel free to book a call if you want to talk about your specific situation. Until next time, keep building, keep growing, and remember, your backend finance doesn't have to be a nightmare. There's a better way, and we're here to help you find it. See you next week.